going on, everybody? This is Lucci here with another episode of Wall Street Porn. Now, today's big money makers were Google and RIM. Okay, I actually have a shitload of information to get through, so I'm just going to go ahead and get into it. Okay, so every morning I post my watch list where I talk about the news that came out the night before and trades that I think are going to happen throughout the day. So two trades that I was talking about in the morning that could possibly happen were to short Google by buying the 560 weekly puts, and to take research in motion long by buying the 62.5 weekly calls. Both of those trades came into fruition today, and they were both big money trades. In this particular video, I'm just going to talk about Google here because I want you guys to try to understand a little bit more. I'm going to go a little bit further into detail about the weekly option and how you could have played it. So let's take a look at the action in the stock first, just to give you a precursor into why I thought this move was going to happen. So here's the 580 level. First of all, this is a 10-day chart of the action in Google. So this is the 580 level, and as you can see, he's been bouncing off this thing constantly. So it gets down here, bounces, gets down here, bounces, gets down here again, bounces, gets down here again, bounces. Okay, so everybody was looking at this level to take it long. Now let's take a look at the action today. News came out this morning. Now this action here in the lighter gray is pre-market action. Okay, so he's right at 580. And this news came out this morning about some kind of lawsuit. Also, they're buying Groupon as well. I don't know whether people reacted negatively to this. I don't know why. I really don't care. But the fact is, it got below 580. So that tells me, all right, he's below 580. All the people who've taken this long, they're going to want to get the hell out of this thing because this thing could tank extremely hard. And it did just that. So it opened at around 575. And as you can see, look at this candle down. Bam! Down to 562.5 right off the open, and this was by 9:45. This was about in 15 minutes. And then it had a slow rebound and then came all the way down to 554, I think, at the low maybe. So ridiculous range in this. Now let me show you the option action. This is a chart of the performance in the 560 weekly put, the option that you wanted to play in order to get this move. Now remember, this is a put. So as the value of the stock goes down, the value of this option will go significantly higher. Okay, this is a 560 put, so as he gets closer to 560, again, the value of this option will go strikingly higher. This is a weekly option that expires on Friday. Okay, keep that in mind. So this is the day's range, $2 to $11. Okay. Again, $2 to $11. Now, this is why we call it Wall Street Porn, because if you get one of these moves, okay, I don't even have to tell you, all right? So that's the porn part of it. You figure that shit out. Now, so let's give an example where you buy right off the open, right here. Let's say you buy, you try to get 250. All right, let's try to be a little realistic. You bought right off the open, which is exactly what we wanted to do. I mean, I saw this thing open at around 225. Got down to like $2, and then in seconds, literally, up to 4 or 5 and change. So let's say you bought 2.5, and you sold right here. Okay, so this correlates to the first move down in the stock, and let's say you sold right here because you figure, you know, you get 10 points in the stock. Let's take your profit off. Okay, so let's say you sold right here at about $6. How much money would you have made? So let's pull up our notepad. Now remember, in all these episodes, we've been using 60 grand as an investment. So let's say you took $60,000 and you bought all your options at an average price of $250. That means you have about 240 contracts. Okay? So you got 240 contracts at an option price of $2.50. All right? So let's say you sold after the initial move down to 562. Okay, so let's say you sold at, let's say, 5.5, right? How much money would you have made? Okay, so let's take that 240 contracts and multiply that by 555. What do you got? You got 133,200. Okay, so that means you made a profit of 133 minus 60,000. profit of 73,200. Okay, so a little bit more than double your investment. All right. Now, take a look again at this options chart. As you can see, it would have paid you off a lot more, obviously, had you have held the whole freaking day. Now, there's no way, again, I'm going to reiterate, there's no possible stinking way that you can take this off the open and hold it till here and sell at the high. There's no freaking possible way. It's not possible. The only thing you can hope to do is do the best you can and hope to make, a decent move, like that move in the morning. Now, here's the thing that I wanted to point out. There was plenty of opportunities to get back in this name. Okay, so let's take a look at this chart again. When this stock bottomed out at around 562.5, you can see this huge bounce. Now, these bounces happen because you can't just have a 10, 15 point move down in a stock without having some kind of recourse, okay? There's buyers who want to buy the dips. There's people who shorted who want to cover and take their profit. So that's what causes these rips. So now, at the high here, you got about 568. You could have bought those puts, those same puts again, and made a shitload of more money on a second trade, a third trade, a fourth trade. And that's what I want to show you. Let's go back and take a look at this options chart. As you can see, that bounce caused the value of this option to come back down to $5, where he sat for quite some time. Okay? Now remember, when stocks consolidate, and what I mean when I say consolidate means they're in like this range, a couple points up and down. The option values tend to just level off or go down in value. Okay, so let's check out this option contract. What happened? So as that stock was consolidating around like 565, this option value just kind of streamlined here at $5. Okay, so you had all day to pick up this option at $5 or anywhere under $5. Now let's say you picked it up again here at $5 and sold right here at $7, or you figured, okay, he's going to make a new low on the day and he's going to continue to push lower, and you took $5 and you sold at $8. All right, so there's another trade there. So the point I'm trying to make is that you can really day trade these options and make a lot of money doing it. However, we're looking at this chart in hindsight. Okay, it's a lot more complicated than picking a price on a chart and then selling it up here, or buying here and selling up here, buying here and selling here. A lot of it is intuition. You have to learn how to read charts. You got to learn how to feel out buyers and sellers. You got to learn how to feel weakness or feel strength. So a lot of it comes down to intuition, and that takes a long time to learn. One of the goals here, I think, would be for me to set up a live stream where you guys can actually just watch me watching bid and ask prices and getting a read on the stock and figuring out where it's going to go. So that's another goal here for the future. But all that set aside, right here, I mean, this is what we're looking for. This is what we're after. This is how we're going to turn $1,000 into 100,000, 200,000, and this is how I'm going to turn 100,000 into six figures. Okay, so this is what it's all about right here.